Good morning and welcome to the show. Now listen, guys, I'm having to do the show just a little bit early this morning is because I got to go into town and I got to I got to go before a judge because of a traffic violation. And I feel like I did not do anything wrong. And I'll just tell you what it is. I was going down the highway, they didn't have the lane obstructed or anything. They'd pulled a few people over on the right. There's a few cops there, they'd pulled a few people over on the right and they're giving them speeding tickets and stuff, And so I was in the slow lane, okay, driving along at normal rate of speed. And these cops were there. There's maybe a couple of them, several of them there, and they had the people all over on the right. So I started to slow down. Now, it was a wet day. It was raining really bad that day. And I looked in my rear view mirror, the side mirror, not the center mirror, but in the side mirror, to check my lane to get over because they wanted me to get over. I knew they wanted me to get over, but I hadn't checked the high-speed lane. I was in the slow lane, I hadn't checked it. So I looked in my mirror, and it was all covered with water. I couldn't see out to get over. I couldn't check the lane. And by the time I was done doing that, I was already on them, and some of the cops are standing right next to the side of the road, And so I knew that to visibly check that lane, I'd have to turn my head around and look, which would mean I'd have to take my eyes off the road, and I had cops standing right next to the edge of the road, and I was going by them at high speed, And so it wasn't prudent of me to turn my head and look, actually visibly check my blind spot with people standing right next to the edge of the road. So I proceeded right on through. They wanted me to get over. They got pissed off about it, because I didn't get over when they just expect you to get over without checking. I can't check the lane. It was impossible for me to check the lane. And so they chased me down, pulled me over, and gave me a ticket. Huge ticket. Well, I don't feel it was just myself, because I was the driver, and I think I acted in a prudent manner. Anyway, it's the first ticket I've had in like 30 years, because I'm a very careful driver, So I got to go in there and I got to fight it. And, I mean, the way the system is structured, I'll probably lose. But I feel a moral obligation to fight it. That's just the way it is, So anyway, I won't be able to give the market report right on time this morning. But anyway, let's get right in there. And we're early. We're early because I got to be in there right at 9 o'clock in the morning or whatever, So we're a little bit early giving the market report this morning. The markets haven't quite opened yet. So, but I'm doing it anyway. What the heck? Okay, so let's get this show on the road. Let's open up the charts right here and take a look at what's going on. First thing we're going to talk about is Deutsche Bank, To tell you what, John Kyan, he was the former manager of Deutsche Bank, Now, at this point, this stage in the game, he came forward and he told on Deutsche Bank, they've got a 60 billion euro malinvestment that they're carrying on their books. This is what he told. And every year, they're like paying it off all the way until the year 2030. They'll be paying it off. And every year, it's taken like 10% of everything that they got, like of all of their first tier capital and everything else to pay off these malinvestments. 60 billion euros of malinvestments, and it's costing them like 500 million euros a year to pay off these malinvestments. And so this is one of the things that's dragging this bank down, And so we can see, if we go back to a year chart on Deutsche Bank, we can just see that they've went down over the last year. And now they're bottom bouncing. Boing, boing, boing across the bottom. But they're kind of like a puppy dog swimming in a swimming pool, They're keeping their head above water, but barely, just barely. And so we got to keep our eye on them, because at any point they could just go plunk down. Chung, chung, gone, and create a $100 billion black hole in the financial system that's linked into an awful lot of other banks. Okay, so this is something we got to really keep our eye on. They got a $45 trillion derivatives book. That alone is going to set a black hole in the financial system of about more or less about $50 billion black hole in the financial system. And the problem with these holes for the bank is when they get a black hole in the financial system, they can't fill it. See, they can create money, banks can, but it's only a one-directional money tool. It only works in one direction. It's kind of like water flow. If you've got a valve in, it only allows the water to flow in one direction. The valve will only open in one direction. The water tries to go back this way, it hits a wall. Well, that's the way with their money creation tool. If they get a black hole where there's a hole in their books, they just can't go ahead and create money to fill that. Their money creation tool does not work in that direction. And so then they have a big hole in their books. The only way to fix it is to get a government bailout or to rob the money from the creditors to the bank, which is called a bail-in. So a bailout or a bail-in. They don't have any other options to fill a black hole. And normally within banks, they might get small black holes within their system, and they're able to try to paper them over using tricks and accounting techniques or whatever. I mean, it just or just stalling for time or trying to get a government bailout or whatever. If it's a small black hole, but you get a huge black hole in the bank's books, and they got a problem. And this is what's happened with Italy with their non-performing loans. They've got huge black holes in their banks. And the banks can't fill them. So the Italian government has come along and they've basically bailed them out quite recently. If they hadn't have bailed them out, Italy would have already went down. But bailing out these banks can become zombie banks or not profitable banks, and they continue to operate and they continue to create new black holes within the financial system. And eventually, Italy's not going to be able to bail them out any longer because the Italian bonds yields are going to rise. I mean, it's just as simple as that. So anyway, I know I've talked a lot on this, but let's get right in there to the rest of the markets real quick, and let's do this. Let's see what they're going. Silver's at Bitcoin is at 39.25 today. And you know what we see here? We see Bitcoin surging upwards, but what I really take note of, the biggest thing I take note of, is after this surge just ended, and we were at a price of around 38.70. Okay? Ever since then, till now, Bitcoin has been very slowly rising in price. Right now it's 39.25. That is very, very bullish. Really, that's very, very bullish. In my mind, that's very, very bullish. The fact that it's slowly rising in price after it had that rise in price, that massive rise in price, where it went up from roughly 3,500 to almost 4,000, which is about a $500 rise in price. And now it's slowly creeping upwards. That's very bullish. Let's take a look now at cryptocurrency market capitalizations, $134.6 billion. Bitcoin dominance at 51.9%. See, all the coins are up. One of my favorite coins, Litecoin's, almost breaching $50. Right on, almost touching $50. Bitcoin is almost breaching $4,000. It's really close, guys. Ethereum's at 148 bucks. XRP is at, Ethereum is a very interesting coin. Ethereum and the Ethereum blockchain enable smart transactions, and that was a big new invention, not just Bitcoin. Bitcoin was one big invention, and then Ethereum was a second big invention, and probably just as big as Bitcoin, really, of an invention. Bitcoin enabled money. Ethereum enabled contracts, and enables you to keep on the blockchain your marriage certificate, your land ownership, your property deeds, everything else. It's an amazing technology. Let's take a look now at the silver price today. What we're seeing here is we're seeing a price of $15.80. It was moving upwards earlier. Now it's moving downwards a little bit. It's up 4 cents on the day so far. It's basically holding that range, but it's moving toward the bottom side of the range, the new range that it created. Now let's take a look at gold. Gold price is down $1.60. $13.21 right now. Let's take a look now at the Dow Jones. It was 103 points down yesterday, but we're going to take a look at the pre-market this morning. And what we see in the pre-market is these numbers are kind of small. Let me focus in on it here on the Dow Mini, so you can see it better. I'll focus in closer so you guys can see it. We're up 87 points, 88 points so far in the morning on the Dow Mini. That's what we're up right now on the Dow Mini. There we go. Okay, so that is your market look for the day. And we'll have to see what the market really does when it really opens up in a few more hours. Oil. Now we're going to take a look at oil. Oil is at $57.11. It's up 15 cents on the day so far. You know, but you see oil's been trending upwards ever since it reached that low of $43.93 back on December 24th. It's been creeping up, you know, and it's continuing that creep upwards. Now let's take a look at U.S. Treasuries. Now what I want to show you here with Treasuries is I went to the 10-year on the U.S. Treasury for a reason here. Is because even though we see yields have been lower lately, and they've been falling, sometimes falling, the overall trend, if we go back here to June 27th, 2016, okay, that is when the Treasuries turned. That was a turning point. And what we see here is if we draw a line between there and where we are now, right? Even though we've had a couple dips down, and we're in one of those dips down right now. Okay, we're in the second dip down. We have one big dip down here. We're bottomed out on September 5th, 2017. It was a bottom of a dip. It looks like we're in the bottom of another trench or the bottom of another dip right here, but the overall market is falling. You can see that Treasury yields have been rising overall. And so there's no reason for me not to conclude ultimately that we're at the bottom of a dip right now, and we're going to see Treasury yields start to rise. That's the overall trend here, okay? So now let's take a look now at the U.S. dollar index, 96.63 on the U.S. dollar index. And dollar index is going up a little bit this morning. But, you know, it's been staying in this range sort of between 95 and 97 for quite a little while now. And this is because the Fed really hasn't relented on their quantitative tightening program. As long as the Fed maintains their $50 billion a month of liquidity that are drawn from the system, this dollar is going to stay up around 96. If they back off of that program, which they've indicated that they're probably going to, we're going to see a precipitous fall in the dollar. We're going to see it fall. Probably at first back into the 80s, 87, 88. That's what it'll do initially. And I'll tell you what, this could actually lead toward something greater happening that's too long to talk about. It's too lengthy to talk about in this particular show. Thank you guys for listening. Like and subscribe, and we'll catch you in the next episode. Bye-bye, guys.